Welcome back. Finance Minister Bill English and new Reserve Bank Governor Graeme have signed a new policy targets agreement with only a few tweaks to the bank's key goal. It will be business as usual with a refined target of around 2% inflation. The New Zealand dollar has continued its strong performance this week, a trend that's certainly hurting some of our exporters. New Zealand First Leader Winston Peters is pushing a bill to amend the Reserve Bank Act so that the Governor would have to take into account jobs and economic growth and the strength of the dollar. But this is what Economic Development Minister Stephen Joyce had to say about Peters' bill on our program last week.
It's truly ludicrous, and fundamentally it is a snake oil salesman solution. And Parker was called on the left this week by his own supporters on the left, who said what he's arguing for is he's sitting in front of exporters and saying, I want to make life easier for you, and then he's turning around to New Zealanders and saying it will have no impact on you. And fundamentally that is not the case. It's dishonest, and you can't say it.
Well, let's welcome to our panel New Zealand First Leader Winston Peters, also Labour's Finance Spokesperson David Parker and Don Brash. Thank you all for coming in. Snake oil, I think he said, Mr Peters. You've always opposed the Reserve Bank having as its key objective inflation. What would your bill change?
My bill would have the effect of giving a number of balanced targets for the Reserve Bank to look at, not just one target, which is blunt and crude, that is inflation, having all the primacy or the only significant a concern, and it would have this effect. Because you'll hear all the theory today and you'll hear it in the next few weeks, but the reality is it doesn't. The Reserve Bank bill, that focus on one thing, does not fit our export-dependent economy, which we are more than like any other country in the world. And the second thing is you've got exporters, orchardists, farmers, timber workers, forestry companies, manufacturers, and tens and tens of thousands of ordinary New Zealanders who are seriously being penalised by this extreme ideology, which now all around the world is being debunked by far better minds than you're going to hear in New Zealand or on this debate. OK,
David Parker, in principle, you support this bill, don't you?
Yeah, I do. You know, look, I've just been overseas. Jeffrey Frankel, World Authority on Monetary Policy, says no one system of monetary policy is right for all countries. Further, he says no one system of monetary policy is right for any one country all of the time. The world had the gold standard, then it focused on exchange rate controls, then the supply of money, then inflation targeting. Inflation targeting for New Zealand has passed its usefulness. It was very important at the time to focus solely on inflation, but at the moment we face competitive devaluation abroad. This is hurting ordinary New Zealanders who are losing their jobs and leaving to Australia as a consequence. We've got to move on.
The world has changed, hasn't it, Mr Brash? There are other issues that perhaps need to be taken into account. Do you see merit in this argument?
No, I don't. I think let's be clear what we agree on. I think we agree the New Zealand dollar is overvalued, and that's hurting exporters and those who compete with imports. We agree on that point. I think we also agree that getting the New Zealand dollar down would actually have the effect of reducing the real wages of New Zealand workers. That's how it works. It makes us more competitive by reducing real wages. We agree on that point. The question really is not whether more...
I don't agree on that point.
Well, no. The reality is devaluation of the exchange rate has no benefit at all for exporters unless it has the effect of reducing New Zealand costs relative to the rest of the world. That's how it works. So let's be clear on that point. The second point I make is, let's say we do want to get the currency down. What can the Reserve Bank actually do about that? I think there are only three things it can do. One, it can intervene in the foreign exchange market. We know when they tried that in 2007, it did not work. We know that in Switzerland it has worked, but in Switzerland, the central bank's balance sheet is now 3/4 of Swiss GDP, and the intervention is costing them billions of dollars a year. Secondly, they could cut interest rates, the Reserve Bank could.
Yes.
And we know that if they do that, other things being equal, that will lead to higher inflation. And in no time at all, the lower exchange rate will still be too high for exporters.
David Parker, you disagree?
Yeah, I do. Look, New Zealand has been getting poorer for decades in that we haven't covered the cost of our imports and interest from the value of our exports. And until we do that, we will continue to get poorer because every year you run an external deficit, you've got to plug the gap by either selling assets or borrowing more money from overseas. And that's what we've done for ages.
That point's agreed. That point's agreed. The question is, how do we fix it?
We've got to fix it by doing something different to what we did yesteryear.
Can I just say this? 24 years years on with the Reserve Bank Act. And we're still hearing, but if we'd only fix up the RMA and industrial relations, we'll make our dollar more competitive, and that's the way to do it. 24 years on, meanwhile, people's careers, their lives, their manufacturing, and our manufacturing base is sliding now to, it used to be 30% of GDP, now it's 30% and declining, and he's still arguing for that blind theory.
I'm not saying we should ignore inflation. No one's saying that. I'm just saying we shouldn't give primacy to inflation targeting over other important aspects of management of the economy. Other countries aren't. We face competitive devaluation abroad, and we ignore it at our peril.
What he does want the Reserve Bank to do.
Certainly.
I want to give the Reserve Bank the responsibility of more than just having the excuse that say we've got inflation under control.
What should they do?
They can do any of the things that overseas governments do, whether it's America, United States, Europe, Singapore.
They can do all the things that they do.
No, be specific. Be specific. That those countries are all essentially inflation-targeting countries. Why are they printing money? Because the interest rates are zero.
No, they're not. You know, look. Nobel laureates like Joseph Stiglitz, the head of the IMF, say that inflation targeting being given primacy over other aspects of of economic management is wrong. The economy has to work for ordinary people.
Yeah, I agree.
The economy, well, it's not. That's why they're going to Australia in droves.
Monetary policy.
The answer is that overseas they use a range of tools at different times for different circumstances, and you're saying that they're paralysed. Your theory says you can't use any of those tools because they don't work.
Look,
unfortunately for those export countries that have gone way past New Zealand, like Singapore and elsewhere, it works for them.
And I think Lee Kuan Yew
knew more about the economic fundamentals of a country than, with respect, you or your colleagues do.
The Reserve Bank should focus on more than inflation, including the exchange rate. How do they do that? Well, you know, in the last decade, they should have focused far more on controlling liquidity. That would have been, you know, they ignored asset price bubbles. They said that, you know, control of inflation is nirvana. They say, well, governments should run surpluses. Well, we did as a government. We ran record surpluses and got panned by you in opposition for doing so, and still we had asset price bubbles. We had the currency going through the roof, and we had uncompetitive exporters. What can we do? We can use some of the tools that are used overseas. Is it right to print money like Switzerland? I don't know. Sometimes it is. Is it right to control excess capital inflows like Brazil does? Yes, sometimes it is. At the moment, the Reserve Bank doesn't do those things because they put the primacy of inflation targeting ahead of other things.
When I was governor, I sent my senior economist to Chile, which had capital controls, and to Singapore, which doesn't have the same capital controls, and neither of those situations would work in New Zealand.
Well, the world's moved on, but we haven't.
Can I just say one thing? This debate, see, it's been conducted on a so-called theoretical level, but it comes down to this. Are we going to back our own people, our own industries, our own workers, men and women,
by cutting their real wages?
Critical as country's future,
their real wages.
or are we going to run the country for downtown Queen Street paper shufflers and overseas money speculators?
Let's be practical.
That's what it comes down to.
What do you want to do? Let's be practical.
In my bill, there are a range of options to use.
I would give an objective to the Reserve Bank relating to the exchange rate so that we actually move into a neutral current account position. Don, when I gave my maiden speech in Parliament, I said that New Zealand focused too much on GDP and not enough on GNP. After that speech, you came up to me and said, David, I agree. Yep, Since then, New Zealand's had negative GNP every year. Every year.
David, we agree on the need to get the exchange rate down. We agree on that point. The question is, how does the Reserve Bank do it?
Well, the Reserve Bank stands against that at the moment because it's given the primacy of putting inflation targeting ahead of everything else.
It can cut interest rates and get the exchange rate down, and the inflation rate goes up. How does that help exporters?
Well, you know, this idea that just because you position yourself a little bit further away from the primacy of inflation, you're somehow going to give way on inflation as an appropriate thing to control. It's a false dichotomy. You can do both.
Mr. Brash is continuing an argument that for 24 years they have argued, and all the effects of a sliding economy and, as you say, GNP not increasing but sliding are right there in front of him. And now he says, as they're saying in Parliament, and it's the same voice being parroted in Parliament by Stephen Joyce and John Key and Bill English, oh, but we've got to make all these other changes. So which decade am I going to get that right?
But let's just take it back to this.
So let me interrupt here a moment.
If you do cut interest rates, it will have an inflationary effect. That's the reality.
Yeah.
So then you get a housing boom.
How do you counter that? No, there are measures you can take to stop a housing boom.
What are those measures?
It's to do with what banks do, and you can't let these people from Australia in the main just run a bank lending rate or bank lending system that has no regard to our economy.
You can
so
use
that housing is a big issue.
You can use loan to valuation ratios.
Yes.
You can change the capital ratios required of banks for different sources of lending. You can have maximum terms of loans so that people have to repay their loan over short. There's lots of things can be done. Look, Stephen Joyce is out there saying that anyone
that will
who's
make it harder to buy a house, won't it?
That's right.
Actually, what makes it harder to buy a house is when the price of housing doubles. And that's what happened in New Zealand under Reserve Bank management, which ignored asset price inflation. Stephen Joyce accuses critics of being snake oil merchants and voodoo economists. He's accusing Nobel laureate Joseph Stiglitz. He's accusing the head of the International Monetary Fund, one of the best economists in the world, Olivier Blanchard. They say that inflation targeting is too narrow a focus for good economic outcomes.
Don Brash, should there be
and that's
some
what we're meant to be
amendments
doing. We're
to
meant to be
the
having
Act?
good
No,
economy, not just the control of
Absolutely should
inflation.
stay the
Best
same.
practice internationally, as Alan Boddard said yesterday on radio in New Zealand, we were the first to embark on inflation targeting, and 23 countries have followed our example and have not changed. They're basically inflation targeting countries.
They've just about all changed.
Okay, but
That's
in
right.
the same vein, John Key said last
Absolutely.
week. At the same vein, John Key said last week, New Zealand cannot compete when the dollar goes above 75 cents. What is it at the moment? 82?
That's a dog whistle to tell those people that vote for the National Party, provincial New Zealand, that he cares, but he won't, like Mr Brash or Bill English, do a darn thing about the critical part that everybody used to understand for 100 years about New Zealand's economy. We're export dependent and our monetary policy should reflect it.
New Zealand and Australia have...
and Winston Peters both want to reduce the real wages of New Zealanders because that's what
really?
devaluation means.
I want to give them high-value jobs.
That's what devaluation means.
No, it
No, it doesn't.
Of course it does.
Look, you've got a declining balance sheet in New Zealand because every year we get further towards bankruptcy because we don't cover the cost of our inputs. New Zealand has had a resources boom. Australia has had a decade-long resources boom and they haven't had a current account surplus. But how can that be right?
I tell you what, Mr Brash's theory is absolute bunkum. To make money, we need somebody offshore bringing money home for New Zealand Inc. We need somebody going offshore to bring money into New Zealand Inc. or tourism. Now, what we are saying is that you should ensure that your monetary policy understands that. And when that happens, you create greater wealth and you can pay your people more. You can pay greater wages. Okay. His theory is bunkum, that somehow, if you do all this, then the wage structure will go down. That's what they believe.
If you devalue, your real wages go down.
OK, can we take it the fact that Labor's supporting New Zealand First bill here? Can we see this as a little bit more of a lessening of the gap between the two parties?
No, I don't think you can read that at all. We took into the last election the view that you can't give primacy to inflation targeting. You've got to amend the Reserve Bank Act. So that's been our policy for 3 years.
So you'll support Winston Peters' bill? We
do. I mean, there's some wording changes that we'd like to see at Select Committee. But yes, we absolutely agree.
Well, it's not perfect, but I want debate.
Exactly.
In opposition in 1999, Michael Cullen said much the same thing. He got a Swedish expert to look at the framework and he said New Zealand's framework is world's best practice.
The world has moved on.
We do have to leave it there, gentlemen.
Inflation's not our worst problem.
Thank you all, though, for your time this morning. David Parker, Winston Peters and John Brash. Thank you.